Everybody, this is John. Welcome to the free video. Let's dive in here and look at a couple of things for upcoming monthly expiration. So the first one is Priceline. We caught a very nice move in Priceline on a bullish play that's hit most of our targets now. And what we want to do is what is next. So you can see here that from here, we had a nice squeeze, hit our targets. We've still got the put credit spread. We're just going to let that one expire. Potentially try to buy it back if those spreads come up a little bit. But now it's looking for the possibility that we might pull back to the mean. So in a situation like this, do we want to buy puts? I don't want to. Could we sell call credit spreads? That's a possibility. But what I like the idea here is just looking for something that's a little bit better risk to reward ratio because, look at, face it, Priceline's been a strong stock. So now this is the old put credit spread. Sold it for $4.30. It's 20 cents. Obviously, almost max profit here. We tried to buy it back today at 20 or 15 cents and couldn't get filled on it because the spreads are so wide. Right now, we've got enough cushion in this that I'm not too worried about it. I mean, we're $67 away from this price. Although, of course, it would be ridiculous if this thing went to a max loss. Like that would be the worst thing for this trade to do. So we want to still trying to work on getting out of this. Not too concerned at the moment. So what we did today is added this iron fly, and this is essentially a kind of a good example of essentially weekly options for income. And this is something where the risk reward level is great. We are, our max potential credit on this is $25, and we got a $21.64 credit. So on something like this, we're risking about $3,100, give or take, to potentially make something like $21,000. Now, is that what's going to happen? No, because to make that much money, it would have to pin exactly at 1600. Now, if it just drops to 1610, great. We make some decent cash on that, as that turns into about a $10 credit. So anyway, you get the idea. It's just a way to play a potential pullback without the risk of, say, a call credit spread, where if this freight train just keeps on going and blows right through it. On the other hand, the other thing I'm looking at here is for NVIDIA. We've got an interesting play right around 110, okay? And here we did the same thing, doing some iron flies right around 110 with the idea that this is a $4 wide fly. We can sell it for $2.64 in this case, $2.50 in this case. So we've got a pretty good credit. And if we can stay in a range plus or minus $2 from 110 into the end of the week, we make some money off of this. And if it does pin or close close to 110, we can make bank. So good risk to reward ratio once again. And then last but not least, for weekly options, JP Morgan has got some nice open interest at the $90 strike, and a couple different ways to do this. Of course, you could say, well, why not buy a call? I like the idea here of selling some in-the-money put credit spreads where we got some intrinsic and extrinsic value, as well as if you're a more advanced trader, you could just sell the naked put with the idea here that we can continue climbing to 90. So the main point is that with weekly options, there's a lot of interesting opportunities that we want to take a look at. So I love the idea of trading weekly options for income. They are made for income. They're made for selling premium. And I learned some of the strategies that I use, I learned from Bruce. For those of you that are not aware of Bruce, or if you're not really sure what the best way is to try to trade weekly options for income, Bruce is going to be doing a free webinar. Bruce Marshall's favorite weekly income plan. It's how to generate steady cash flow in less than 3 days a week. And his way of doing this is a little bit more what I would call hands-off approach, kind of a set it and forget it strategy, whether if you're trading full-time or you're only able to do it part-time if you're working. It kind of works for both angles. So the free webinar is going to be tomorrow night, Wednesday, February 15th at 7 o'clock Central. Okay, and here's the things that he's going to talk about. So very simple strategies for consistent weekly income, even in highly volatile markets. I mean, right now the markets have been kind of quiet, right? But what happens if they get volatile? Well, he's going to show you that too. How to hit a 10 to 12% trade profit goal with reliable double-digit annual returns. How to walk around landmines that deny most traders consistent profitability. This is a big one because, 7 to 8 to even 9 times out of 10, these trades are pretty easy. But what about that 1 time out of 10 when you get that triple upgrade on something that you were looking for something to be quiet? How do you deal with that? Well, that's what Bruce talks about. How to choose the correct setups for your income goals. All right. Okay. You don't want to wing this. A lot of people come in and try to wing it, and then they got to go find a job. Why broad market direction doesn't matter when you do this right. Okay, that's important. The blueprint that allowed Bruce to generate a double-digit return on a $100 million institutional fund, and a lot more stuff. He's got a lot of wisdom there. You'll see the sign-up page, or you can just type in simplertrading.com/weekly and get registered for your free webinar. Okay, have a good one, and see you on the other side.